Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 8th of April, and sponsored by the UK Investor Show. Starting off with the Vactor, where there were high hopes for the stock January going into February. We had that peak through 30 pence, a bit of a bull trap through the former June 2019 resistance. Came back to bear trap below November-December support, sub 15 pence, which was about as nasty as you can get. But the good news after all that is that having gapped up and made sure that anybody who was short had a pie in the face, we should expect further follow through. Hopefully now above 30 pence rather, we'll see the shares make a beeline for that resistance line at top of the broadening triangle there from 2018 up towards 60 pence. At this stage, only really back below the 50-day moving average, way back down at 23 pence as a trading stop would really upset the breakout scenario for the shares, especially with the COVID-19 link that it now has. A stock which is new to the Bulletin Board Heroes, which I picked out, is Arix Biosciences. It looks as though in turn we'll see almost every pharma, whether it's related to COVID or not, improve over the near term, just as this particular space gets a bit of popularity back. What you can see here is that we've got a break, at least so far, of the late March resistance at 65 pence via a gap, so that should mean that we'll have decent follow through towards the March resistance area and the 50-day moving average around 77 pence, so 77 to 80 pence really the target, while we're above the floor of the gap at 62 pence currently. A nice bullish divergence there with the lower initial April support there for the shares, providing decent momentum for the stock. Next up, a stock which I've looked at on a couple of occasions recently, Caspian Sunrise. Here we've seen the way that the shares have broken that line of resistance from the start of the year, running through 3 pence, and while we're above 3 pence, looking for, I suppose, a return to March resistance around the 6 pence area. In the meantime, we have the 50-day line just below 5 pence as an initial target. Stock which has become COVID-19 related all of a sudden is Iconic Labs, which presumably would have surprised the doubters here, but at least we can say that above 0.02 pence, which was initial April resistance, we could see the shares as a best case scenario head towards the post-December resistance area, which is between 0.06 and 0.08 pence. So sounds optimistic, but if it is a COVID stock, COVID beneficiary, then perhaps that's not too optimistic at this point. On to Jangada Mines, where we've broken a resistance line after the steep January sell-off that the shares had. The resistance line there broken at the beginning of the month, and really while we're above 1.2 pence, looking for further gains. Best case scenario here probably while we're above 1.4 pence, the initial April resistance, we could head up to 2.5 pence plus, or 2.6 pence in fact, which is a January resistance line projection. I suppose we're in a broadening triangle, which I'm just drawing at the moment to back up the bulls there. The other plus point to notice is the way that the 200-day moving average is now rising, and that should drag the stock higher over the next few days and weeks. Next contender is Novocyte, which is obviously the king of the COVID stocks, the testing company. Here we had a break of that resistance there around, I think it was 214 pence, that last March high. That then became new support, and obviously today we've gapped up with the WHO connection for the shares. Obviously the WHO rather than the doghouse at the moment, but Novocyte certainly benefiting from the current situation. And £3 or maybe up to £3.20 now the target, while we hold above the initial April resistance at £2.27. Ideally, there's no break back below today's intraday low at 230 at around the 236 area, but one would have to allow down to that gap floor in order to be sure that the shares will maintain their momentum. Next contender is one that I've looked at in the recent past, but not that recently. Here we've got SafeStyle, which I believe probably was looked at before the rather horrific February-March plunge for the stock. I've got an early bird opportunity here, perhaps with the break of this resistance line there from February, so that above 20 pence, we've got a chance of maybe a move towards the 30 to 38 pence area. That's basic support on the way down. The 50-day moving average at 38 pence is probably the best case scenario target at the moment. A stock which had a windfall announced yesterday, which was receiving $40 million, comes in the form of San Leon Energy. Here we've seen the shares back around the former 18 pence support from the year before last, in fact 2018, and we've had a bear trap below that. The view at this stage is that at least while we hold above the 15 to 18 pence zone, we could be in recovery mode for the shares and head back towards the autumn resistance area for the stock around the 30 pence level. If you're cautious on the stock, which some may be, you'd wait for a break of the 50-day moving average, currently at 21 pence, before considering that the recovery was well on its way. But so far, looks as though at least we've had a bear trap rebound for the stock. One of the other final COVID plays for the day, it comes in the form of Tiziana Life Sciences, which announced a COVID-related story, as you can see, last month, and the share spiked towards 160 pence plus. Current situation, we're in a sort of holding pattern here between 30 and 50 pence. A break above the 50-day line around 39 pence should be enough to at least get the shares back to the top of the late March range between 60 and 70 pence over the next few weeks. That's it from me. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.